Hi everyone, I'm Mary, one of your AAA module leaders, and welcome to part 2 of a 4-part series of application videos which go through exam-style questions to help you prepare for the exam. In this video, we'll be covering the key concepts in the risk response phase of an audit. Before you go any further, please make sure you've read through the background information on the wine store and you've got a copy on hand. You can download the PDF from the virtual classroom section in My Learning. This is the same scenario from the first application video, so you can see how the full audit process works. If you haven't already done so, make sure you've looked at application video 1. We'll also have some questions for you to answer as we go through this video. Make sure you don't skip these. It's really worth taking the time to pause and think through the answer so you can get the most benefit from this video. This video is based on a practical example, something like you might see in an exam. The question you'll be working on will focus on materiality and designing different types of procedures to obtain evidence in respect of specific risks using the wine store case study. We'll be covering both test of controls and substantive audit procedures. If you've been following the module plan, you may have covered some of these topics already. If not, don't worry, we'll be going through everything step by step. So how are we going to do this? Well, for each section, we'll start with a quick refresher on theory and basic concepts. Next, we'll tackle an exam-style question, first by understanding the required, then applying our knowledge of the theory and basic concepts to the specific facts of the question in order to come up with an answer. Finally, we'll wrap up with some key takeaways and exam tips. Let's start by revisiting our case study. The wine store is a family-owned, unlisted wholesale business. It sells boutique wines from Australia, New Zealand and overseas to retailers, restaurants and event managers. In this scenario, you're an audit senior at the AAA audit firm working on the audit of the wine store's general purpose financial statements for the year ended 30 June 20X3. Remember, this is the same scenario covered in application video 1. If you haven't read through the background information, take a moment to pause here and do so before moving on. So what are we being asked to do in relation to the wine store? We are required to A. Determine the most appropriate benchmark upon which to calculate overall materiality, justify your selection. B. Design a test of controls within the payroll system that would ensure wages expenses are calculated correctly. And C. Design a substantive audit procedure to obtain evidence that the quantity of inventory at year-end has been recorded correctly. Pay special attention to the words highlighted, which are the task words. They tell you exactly what your answer needs to show. You can download the full list of the task words and their definitions from the exam section in My Learning. Before we launch into answering the required, we'll take a moment to recap on some key audit concepts. As discussed in application video 1, there are 3 stages of an audit. The first application video looked at the risk assessment stage, while the third will focus on the reporting stage. In this video, we'll be focusing on the risk response stage. Please note that as mentioned in application video 1, we need to finish an important part of our audit planning, which is determining materiality. So we'll firstly cover materiality and then move on to the risk response stage. So what is overall materiality? Overall materiality is based on the auditor's professional judgment as to the highest amount of misstatements that could be included in the financial statements without affecting the economic decisions taken by the users. In practice, materiality is calculated using a percentage of a benchmark. The identification of the appropriate benchmark considers the economic decisions taken by the users. Note that users are not considered individually, but as a group. By understanding what the users are interested in, you can identify the appropriate basis, that is, the benchmark to use, for calculating materiality. Over to you. So what is the most appropriate benchmark to determine overall materiality for the wine store? Is it revenue, profit before tax, total assets, or equity. Click pause and think about the most appropriate answer. And when you have your answer, click play. The answer here is profit before tax. The users would be primarily the family, the wine store is owned by family members, and the bank, as they have some financing with the bank. They would be most interested in evaluating the financial performance in this instance. Therefore, the focus would be on profits or revenue. The background information stated that the wine store has been growing profitably and there is nothing indicating volatility in that profitability. Therefore, there is nothing in the background information to suggest that there would be a focus on anything other than earnings. Therefore, our solution to the required A would be as follows. As you've clearly determined the benchmark and justified the selection, you have answered the required Part A. Remember to always apply the facts in the scenario when determining the most appropriate benchmark. While we're on the topic of materiality, it makes sense to take a moment to also recap on performance materiality. So what is performance materiality? It's based on overall materiality, but set at a lower amount. It reduces the probability that uncorrected and undetected misstatements exceed overall materiality. Over to you. So let's consider what factors impact the calculation of performance materiality. What are the key factors in the calculation of performance materiality for the current year's audit of the wine store? Click pause and think about the key factors. And when you have your answer, click play. Note the question asks for the key factors. Based on that, it would be risks identified as part of this year's audit and errors in last year's audit. These would be the key factors in the calculation of performance materiality here. Last year's materiality figure might help inform your response or act as a sense check, but that wouldn't be a key factor in calculating this year's figure. Also, the amount of testing does not impact performance materiality. It actually works the other way around. The performance materiality determines the extent of audit procedures that the auditor will carry out. Remember the relationship between performance materiality and risk. The key thing to remember here is that there is an inverse relationship between performance materiality and the risk of material misstatement. So if risk is high, we may need to reduce performance materiality, which means we would need to do more audit procedures. If risk is low, we may increase performance materiality, which means we would need to perform less audit procedures. So let's apply this concept to the wine store. We know from the background information that there has been a history of stocktake errors. Recurring errors would be of concern to the auditor as the breakdown in controls has not been addressed. This would result in an increase in the risk of material misstatement, which would in turn decrease performance materiality. This would mean more audit procedures would need to be performed by the auditor to obtain audit evidence over inventory quantities. Candidates often get confused with the inverse relationship under the pressure of the exam, so this is one to definitely note in your critical file. So now that we've covered materiality, we'll take our focus to the risk response stage. In the risk response phase, we're generally trying to answer this question about the financial statements. Did the events identified occur and result in a material misstatement in the financial statements? This links back to the objective of the auditor, which is to obtain sufficient appropriate audit evidence regarding the assessed risk of material misstatement. the main standard that's relevant here is ISA 330. In the risk response stage, we generally start by designing appropriate responses to the risk of material misstatement identified, and then performing those procedures to obtain evidence that should reduce audit risk to an acceptable level. Often there's a feedback loop because we can uncover things during the course of performing audit procedures that cause us to revise our risk assessment, resulting in a need to design and perform further audit procedures. While we're doing all of this, we're also documenting both the procedures and the results. At this stage of the audit process, the documentation on file needs to demonstrate that the audit was planned and performed in accordance with the standards and any applicable legal and regulatory requirements. Now remember that ISA 315 Revised distinguishes between risks at the financial statement level and the assertion level. The determining factor is whether the risk is considered to be pervasive. That is, whether it impacts the financial statements as a whole or can be isolated to certain aspects of the financial statements. A pervasive risk demands a different kind of response to a non-pervasive risk. That's why ISA 330 distinguishes between two different types of responses to risk. The auditor's overall response needs to address pervasive risk, and so it deals with strategic things like the composition of the audit team, the extent of supervision and delegation of responsibilities, and the way to incorporate unpredictability into the audit approach. In contrast, non-pervasive risks are limited to the assertion level, and so the auditor can design specific audit procedures to address these risks. In either case, the auditor's response needs to be designed to obtain sufficient appropriate audit evidence. So that leads us into designing audit procedures. Part B and Part C of the required asks you to design a test of control and a substantive audit procedure. While there are some fundamental differences between a test of control and substantive audit procedure, the same principles apply when you're designing a procedure. Remember, we start with what is the risk? Then we drill down into the specifics of what we're trying to test. If it's a test of control, the specific control we're testing. If it's a substantive audit procedure, the account that we're testing. We also need to consider the attributes of the control or the assertions at risk. Once we've worked all this out, we can then dive into actually designing the procedure by considering its nature, timing, and extent. All right, let's move on to Part B of the required. The task word here is design, which means to develop a procedure or process or course of action based on selection of the optimum combination from a range of available options. Pay attention to the fact that you have been specifically asked to design a test of control within the payroll system. Don't just write down any old test of control procedure. Make sure it uses a computer to perform the procedure. Finally, make sure you've picked up on the assertion to be tested here. Payroll expenses is a class of transaction, and the words calculated correctly should give you a hint that we're focusing on the accuracy assertion. Over to you. So what is a test of control anyway? You have an option of 3 there. Click pause and have a think about which of these statements is true. And when you have your answer, click play. If you chose the first bullet point, then well done. Remember, management design and implement control activities within processes to prevent or detect and correct material misstatements at the assertion level. A test of control is an audit procedure that is designed to obtain evidence about whether a control activity is operating effectively. So controls is short for control activities. The important thing to realise here is that when you test controls, you're testing how an activity is performed, not the end result from the activity. Let's check your understanding a little more. Here's an audit procedure. Recalculate gross wages and compare this to the actual amount of gross wages recorded in the trial balance and investigate any variances. Is this a test of control? Yes or no? Click pause and have a think about whether the answer would be yes or no here. And when you have your answer, click play. If you chose no, then that is correct. Be careful that for a test of control, your procedure does not focus on recalculating a dollar amount, as is the case here. That would be an example of a substantive audit procedure. The difference between a test of control and a substantive procedure is very subtle and can be confusing since you're using the same kind of underlying information and often you're doing similar things, like recalculating or reperforming. The difference lies in the purpose of your procedure. We'll dig a little deeper into the difference shortly when we look at substantive procedures. So now let's go back to the required part B and answer this question. As mentioned in our previous slide, we always start with the risk of material misstatement, in this instance focusing on the accuracy assertion for payroll expenses. In this scenario, it's pretty simple. Payroll expenses are a function of pay rate multiplied by the hours worked. For this to be materially misstated, either the rates are wrong or the hours are wrong, or both. The next thing you need to identify is a control within the wine store that management have actually implemented to address this risk. You can only start designing a test of control once you've got a specific control and its attributes in mind. The background information contains a description of one key control in the wine store's payroll process. And one way we could test that control would be to use dummy transactions in a test environment. Here we are testing the control by reperforming the control activity, which is an automated calculation application control, using an independent set of data that we've created. Because we've understood the process and the control, we can create test cases that capture all of the scenarios that we expect, as well as predict the results that we should get in each test case. From the background information, we know that penalty rates only apply to hours worked on Sundays and public holidays. Therefore, there are two cases here at the wine store. The first case is when there are no hours worked on Sundays or public holidays, and the second is where there are only hours worked on Sundays or public holidays. In the first case, the rate that should apply is the base rate. Conversely, in the second case, the rate that should apply is the penalty rate. If you really wanted to, you could create a third case where you combine both situations, which would better approximate what would happen in a real pay run. But that's not really necessary since the first two cases already cover all possibilities. Note that we haven't done anything here in terms of a test to verify the actual pay rates used, nor have we tested that the hours in the timesheets have been approved. Those risks would be covered by other controls, and you would need to develop test and controls for them as well. That's it for test of controls. Let's move on to substantive procedures now. When you're performing substantive procedures, you're trying to substantiate or prove whether a particular assertion is materially misstated by getting direct evidence over amounts. This is different to performing a test of control when you're trying to figure out if a process is working correctly and you're not focused on the end result of the process. If we apply this to the suggested solution from the previous slide, what you'll see is that in a test of control, You're focused on testing whether the payroll system is calculating wages, expenses as designed. On the other hand, in a substantive audit procedure, you're focused on substantiating whether the dollar amount of wages expense is materially correct. Be aware that there are actually two types of substantive procedures. Substantive analytical procedures, which are analytical procedures performed at the risk response stage that are used to evaluate amounts in the financial statements by analysing relationships among financial and non-financial information and investigating unexpected variances in those relationships. The other substantive procedures are tests of details, which involve obtaining direct evidence on items that make up a class of transaction, account balances period end, or related disclosures. So now let's answer part C of the required. Same task word, but different details in the required. By now you should be able to translate this pretty quickly. The account at risk is inventory, which is the account balance here. And we can get even more specific since the required is focused on quantity. There are two basic ways for the quantity of inventory to be recorded incorrectly. Firstly, either stuff that is there isn't recorded. That would be addressing the completeness assertion. Or secondly, stuff that isn't there is recorded. That would be addressing the existence assertion. Don't get tricked into thinking the assertion at risk here is accuracy, valuation, allocation just because of the use of the word of accuracy. That particular assertion has to do with the dollar amount of inventory, not the quantity, which is what we're being asked to answer here. Make sure you know your assertions and what they mean, not just what they're called. All right, it's your turn. If we have to figure out what inventory is and isn't there, a stocktake is a pretty common procedure. So do you think this is an appropriately designed substantive audit procedure? Click pause and select true or false as your answer. The correct answer is false. Remember, each procedure needs to be designed outlining the nature, timing, and extent. This statement only vaguely covers the nature and vaguely suggests timing and doesn't cover extent whatsoever. Generally, the more specific you are in your audit procedures, the better. A good rule of thumb you can use to see if you have been specific enough is to look at your procedure and ask yourself, is this clear enough such that someone on a remote island could perform the procedure without having to ask you any questions about what needed to be done? Going back to the required part C, here's what one possible solution could look like for each of the assertions on existence and completeness. The first procedure is commonly known as going from sheet to floor and addresses existence. When you're trying to test existence, you're trying to find out if what management says is in the financial statements is actually there. That means you pick up your sample from what's already been recorded in the inventory records, and then you go and check to see if the inventory actually exists. The second procedure here is commonly known as going from floor to sheet and addresses completeness. When you're trying to test completeness, you're trying to find out if management have omitted things from their records. That means you can't start with their financial records. You have to start from the place where everything should be, in this case, the warehouse floor, and then go back to the records to see if inventory has been included in there, if it should be. Well, now that we've answered the required A, B, and C, there are some key takeaways that we'd like to wrap up with today. Understand the different types of materiality. Remember that the relationship between the risk of material misstatement and performance materiality is an inverse one. Know the difference between tests of controls and substantive procedures, and that there are two types of substantive procedures, substantive analytical procedures and tests of details. Remember, substantive procedures are required to be performed for each material class of transaction, account balance, and related disclosures. Make your procedures specific in their nature, timing, and extent. The main thing to realise is that all of these things focus on making sure that audit risk is kept to an acceptably low level. Remember, the only thing standing between an auditor and an incorrect audit opinion are their audit procedures. Without appropriate audit procedures, an auditor will not be able to obtain sufficient and appropriate audit evidence. If you have any further questions regarding this video, please post them on the discussion board. Thank you for watching this video. We wish you all the very best of luck in your studies.